The danger that I see with stablecoins is that they are potentially going to be the bank run of the future. And the questions that we need to answer are, how do we mitigate that risk so that we have trust in this type of new finance environment? Are stablecoins stable? How do we make them stable? How does that all work, right? And so ideally, it should be for every one stablecoin I have, there is a corresponding asset that is purchased. So for example, let's just use $100, right? 100 US dollars. And I just sold 100 roughly US dollars worth of digital asset. Now I want to put that into a stablecoin. So that movement of what is $100 into a stablecoin, theoretically, the stablecoin itself should be backed by $100 worth of US assets, US dollar related assets, short term ideally. Let's say it's treasuries, et cetera, which are considered equivalent to basically dollars, right? That ideally should be the case, right? So if I'm an exchange and I just released stable coins, for example, I should have assets in stable US dollar investments, liquid investments, right? That's how you maintain stability. The reality is, kind of one of the questions is, who's regulating the folks that are stabilizing the stable coins? The crypto industry by and large is not regulated, right? That's the whole point of it. It's decentralized, it's unregulated. And so how do you know that your $100 worth of digital assets in a stable coin are actually stable? It's only as stable as the trust you put into the organization that has issued that stable coin. And the question I have is that organization, that entity, are they stable? Are they regulated? How do we apply trust, right? And there's this idea. I have this idea that this market right now, this wild west that we are in, is the bank run of the future, right? It is exactly that, because what we're going to see is a large value transaction where a stablecoin provider can't facilitate the outflow. This is a bank run. This is a traditional bank run. I have $1 billion in some stablecoin. We won't name them, right? We're not naming names, but if I go to withdraw that, they have to have that correspondent value. It's just like your savings account. You trust it because those entities are regulated. There's insurance behind it. So if that bank lent it out, but they just don't happen to have it, they could actually go borrow it from the federal government if we're talking about US related financial institutions. But there's a liquidity market for them to fulfill your request. But what if your exchange, oops, I just happened to loan your fiat out? All of a sudden that creates turmoil, that creates chaos, that creates a run, because if they can't facilitate your withdrawal, everyone else is going to be rushing to the gates to withdraw their capital, and that's called a bank run. And all of a sudden you have this completely illiquid market that takes place where people are saying, where's my money? Where's my money? And so the big concern for me is that we will see one of these events unfold, and we don't know what the lasting effects of that will be.